Hey everyone, welcome back to Corporate Decoder, the place where we break down big company news, and guess who just got a fat new funding deal? So what's the big news today? It's all about Cingulate Inc. and a pretty important deal they just made to get more funding. This filing is a current report, meaning something significant just happened, and that something is a deal with a company called Lincoln Park Capital Fund. Basically, Lincoln Park is agreeing to buy up to a hefty $25 million worth of Cingulate's common stock. Now, this isn't like Cingulate automatically gets $25 million. It's more like they have the option to sell shares to Lincoln Park when they need the cash over the next 3 years. They call this a purchase agreement and it sets the terms. Cingulate is in control of when and how much they sell, and Lincoln Park is obligated to buy as long as certain conditions are met. One of the big conditions is that Cingulate has to file a registration statement with the SEC. Think of this like getting official permission to sell these stocks. Until that's approved and a prospectus is filed, Lincoln Park can't really buy the shares. This important date when everything is cleared to go is called the commencement date. Once things are rolling from the commencement date, Cingulate can ask Lincoln Park to buy shares. They might start with what they call a regular purchase, up to $150,000 worth of stock. The price is based on what the stock is trading at in the market at that very moment, but there are no upper limits on how much Lincoln Park has to pay per share. This is a key point. If the stock price is high, Cingulate could get more money for their shares. They even have options for even bigger sales called accelerated purchases and additional accelerated purchases. This really emphasizes that Cingulate is calling the shots. They're not forced to sell any shares, but if they decide to, Lincoln Park has to buy them, as long as those conditions we talked about are met. How much money Cingulate actually gets will depend a lot on when they sell and what the stock price is doing at those times. So what's all this money for? They plan to use it for getting their drug CTX-13001 approved and ready for the market, as well as general company operations and research. Now, there's a limit to how many shares Cingulate can sell under this deal. It's capped at a little over 1 million shares. This is important because it's about 19.99% of their stock that was outstanding before this deal was made. They can actually sell more shares if the shareholders say okay, or if the stock price stays above a certain level. There's also a catch for Lincoln Park. They can't end up owning more than 4.99% of Cingulate's stock at any one time, though they can increase that to 9.9% if they give Cingulate a heads up well in advance. This is a common way for investors to manage their stake and not trigger certain reporting requirements or regulations. An interesting detail here is that Lincoln Park is prohibited from short selling Cingulate stock during the term of this agreement. Short selling is basically betting that a stock price will go down, so they're agreeing not to bet against Cingulate while they're supposed to be a supportive investor. As a sort of thank you for agreeing to this deal and to show their commitment, Cingulate has already given Lincoln Park over 120,000 shares of their stock. These are called commitment shares. And here's a really crucial point for Cingulate. They can actually back out of this whole deal at any time with just 1 day's notice, and they won't get charged any fees or penalties for it. That gives them a lot of flexibility. Now, about how these shares are being sold, they're technically being sold without being registered with the SEC in the traditional way. This is done through specific exemptions designed for private placements of securities, often to sophisticated investors like Lincoln Park, who are considered an accredited investor. And confirming all this, we see the signature of Shane J. Schaffer, the Chief Executive Officer of Cingulate Inc. It's signed with the date July 22, 2025. So what does this all mean for Cingulate? Well, on the surface, this is a good step. They've secured a potential source of funding that can help them move their key drug forward. The fact that they control the timing and have the ability to walk away from the deal with no penalty is a big plus. It means this isn't a situation where they are being forced into unfavorable terms. However, relying on it the market sales means the amount of funding they receive will be very sensitive to their stock price. If their stock price continues to be low or volatile, they might not raise as much money as they hope, or it could take much longer. The company's success really hinges on getting CTX-130 they receive will be very sensitive to their stock price. If their stock price continues to be low or volatile, they might not raise as much money as they hope, or it could take much longer. The company's success really hinges on getting CTX-1301 approved and to market, and this funding agreement is a critical piece of that puzzle. We'll need to watch how they utilize this flexible capital, and most importantly, how their drug development progresses. Alright, that's our breakdown of Cingulate's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching. See you next time.